price is a marketing campaign, but the steeper the price acceleration, the better it is at marketing. And so I always get very nervous towards the ends of these cycles because what you see is a lot of people coming in who don't understand it, who aren't going to be long-term holders, and they're likely to get burnt. And so the best thing I've found is just like any timeless investing principle, just dollar cost average into a great asset over a long period of time. And it doesn't matter if the price is up or down or sideways, just keep dollar cost averaging. And over time, you get this nice, beautiful blended thing. And if you hold for a long enough period of time, pretty much everyone who's bought in the last 4 years, pretty much anyone who has bought Bitcoin at almost any time in its history and held till today is in profit. Right. And that'll continue to be true over the long run. And so just let the market work for you rather than trying to outsmart the market.
When Bitcoin's price starts to rise, something powerful happens that grabs attention. That surge becomes a viral signal. First, it spreads through word of mouth. Bitcoin holders start talking. They tell friends, family, coworkers. Then the media jumps in, flooding the headlines. Soon, institutions take notice and the cycle accelerates. This isn't just about price, it's about visibility turning into curiosity, curiosity turning into belief, and belief turning into widespread adoption. One price move can spark a global shift in mindset, and you're watching it unfold in real time. So if you're here, you're early, stay informed, stay ahead. Smash that like button if you're riding the wave. Subscribe and hit the bell so you never miss the next move in the crypto market. Watch until the end because we're breaking down exactly how this cycle plays out and what to watch next. Got thoughts on the Bitcoin cycle or your own crypto journey? Drop a comment, we want to hear from you. And when you're done, check out our other videos on crypto, digital assets, and how to navigate this evolving financial revolution. Your engagement fuels this channel and helps spread the signal. Thanks for watching, and now, let's dive in.
Price in relationship to value is always a chicken or an egg, right? Does the network become more valuable and the price goes up, or does the price go up and the network becomes more valuable? I would argue that one aspect or framework that I use is Bitcoin does not have a centralized executive team. It doesn't have a board of directors. It doesn't have a marketing budget. It doesn't have, annual earnings reports. It doesn't have these plans that are laid out for folks, right? It is this decentralized network. And so the quote unquote marketing campaign is the price. And you see this, right? As the price goes up, what happens? People start to get more excited because they're holding Bitcoin. They start telling their friends. Their friends start asking them about it. The word of mouth starts to spread among individuals. On top of that, you then get the media starting to write articles or do interviews or podcasts or whatever. So now you've got individual word of mouth spreading. You've got the media megaphones propagating the message on a broader basis. And then you have things like institutions or others who are saying, hey, the trade is working. And so they start to get this confirmatory kind of feedback from the market. And so they say, oh, I bought a little bit, it's working. Good investors, they press their winners hardest, right? So they're going to go put more capital into the trade. And so I think that when you look at those three things, it really is the price is the marketing campaign. Now, of course, the way I usually describe this is as price is going up, more people are coming in. Naturally, more capital is coming in than's leaving. So it's pushing the price further. Then we, at some point, will get overvalued, right? Or the price will go up too much. And so when that occurs, what will happen is the price will start to try to correct. It'll try to find some equilibrium. Now, some people will have bought Bitcoin on the way up. They'll have learned about Bitcoin. They'll become kind of these hardened, long-term holders, and they will hold Bitcoin regardless of what happens with the price. But a lot of people, they're going to come into Bitcoin as a get-rich-quick scheme towards the end of that bull market when the price is really kind of running. And when they come in, they're going to, within a month, 2 months, 3 months, the price is going to correct, and they're going to basically now be underwater on their Bitcoin. Some of those people will continue to hold. A lot of those people, though, will sell and say, I'm never touching Bitcoin again. No different than if you have a mobile app and you run a marketing campaign and 100 people sign up. Well, if all of a sudden 100 people signed up, how many of them are still around a month from now? Maybe 30 of them, right? So a 30% retention rate after 1 month. Great. Well, if you then run another marketing campaign for 100 people and you only are left with 30 at the end of that next month, well, you only have 60 total users. You had 30 after the first month, 30 after the second month. That's your retention rate. The 70 that are leaving from every single marketing campaign, that's the equivalent of the Bitcoiners who are buying at the top of the market. And when it corrects, they just say, I'm out of here. I don't understand Bitcoin. I was here for get rich quick. I'm losing money. I don't want anything to do with this. And so I think that price is a marketing campaign, but the steeper the price acceleration, the better it is at marketing. And so I always get very nervous towards the ends of these cycles, because what you see is a lot of people coming in who don't understand it, who aren't going to be long-term holders, and they're likely to get burnt. And so the best thing I've found is just like any timeless investing principle, just dollar cost average into a great asset over a long period of time. And it doesn't matter if the price is up or down or sideways, just keep dollar cost averaging. And over time, you get this nice, beautiful blended thing. And if you hold for a long enough period of time, pretty much everyone who's bought in the last 4 years, pretty much anyone who has bought Bitcoin at almost any time in its history and held till today is in profit. Right. And that'll continue to be true over the long run. And so like, just let the market work for you rather than trying to outsmart the market. I do think though, that there's also this belief that Bitcoin has gone from a contrarian asset to a consensus asset. And part of that, you can see it with Wall Street now embracing it. But I think that's always a really important part. Everyone knows that, doing something different in investing is really important, and being right is really important, right? If you do something different, but you're wrong, then you're just a dummy. Like, you're just wrong and you lose money. But if you do something different and you're right, that's where potential returns can be. But another part of that equation that usually gets left out of the conversation is you need an idea to go from contrarian to consensus, because you need everyone else to eventually see what you saw early. And I think that's really what Bitcoiners are experiencing now, is when you were buying Bitcoin, 5 years ago, 10 years ago, what you saw were a lot of folks who were saying, that's crazy. Why would you put your money in that thing? It's for drug dealers or criminals, or the government's going to shut it down, or it wastes too much electricity, or whatever the thing was that they got scared away by. Well, the people who were buying Bitcoin, whether you were dollar cost averaging or whatever you were doing, now that went from a contrarian thing to everyone else is like, well, I need some Bitcoin too. And so that shift from contrarian to consensus is really important. I think that also leads to kind of the higher price point, is because it's kind of like the meme, hey, the water's warm, come on in, right? Is the water was cold 5 years ago, 10 years ago. Now it's warm. Now everyone's like ready to rock and roll, and they're going to come into to Bitcoin. So I think you're starting to see that in a major way.
He compares today's investing environment to walking through a minefield. The bull market might be waiting on the other side, but not everyone's going to make it. The ones who do, they'll be the ones who respect the risk, stay sharp, and avoid getting blown up by unnecessary exposure or blind optimism. Interestingly, Anthony Pompliano highlights the discipline of public markets as a major advantage. Unlike the private space where hype can mask flaws, public companies are held accountable in real time. If the business model is broken or the financials don't add up, the market won't lie. The truth comes out eventually. Let's watch more clips from the interview.
Nobody wants to talk about the risks, right? I do believe that a number of these companies are going to get over levered in a way where they are going to basically spit back out the Bitcoin. So you think about it, they're all sucking in the Bitcoin, right? But there's leverage. And so people will do all kinds of calculations, and they'll say, we need the Bitcoin price to go to X, and then we would be in trouble, but X is a really low number. Or they'll say, our leverage ratio right now is only 5% or 10%, whatever, right? People are way smarter than me are analyzing this stuff. All I know is I'm a pretty simple guy. If you have an asset that is highly volatile and in history multiple times has drawn down 80, 85%, and there's leverage involved, at some point over the next 3 to 4 years, dead bodies are going to float to the water, right? They're going to float to the top of the water there. Who is it going to be? I don't know. Somebody smarter than me will figure that out. How is it going to happen? I don't know. Somebody that's smarter than me is going to figure it out. But what I do know is, if you are going to do this, you better do it with a minimal amount of leverage, because that is ultimately the safe way to do it. Now, of course, it's like anything. If I tell you, hey, we can earn 5%, somebody else shows up and say, hey, we can earn 6%. Somebody else says, I can earn 10, I can earn 15, I can earn 20. Where's the line? We don't know. But I do think that being prudent in the public markets with this type of strategy will be a very strong, positive, kind of accretive thing for shareholders. But there will be companies that take it too far. They get over levered. They become undisciplined. They don't know how some of the instruments that they're using actually work. And that's where there will be some issues. So I don't know who it ends up being. I kind of think of it like if we're all walking across a field and there's some landmines planted. At the end of the field, is the next bull market. Who's going to make it? Right. My guess is it's not going to be 100% of people. But also, look, I think that the public markets also bring a lot of scrutiny. One of the things that people don't give credit to the public markets is the public markets are pretty good about sniffing out kind of things that don't work. Right. If you remember, WeWork, when they got their S1, they put it, public markets basically rejected it. Said, you ain't bringing this here at that valuation, et cetera. If you go and you look at, I saw my friend Austin Reef. He's retired right now, so he's got a lot of free time on his hands.
Co-founder of Morning Brew.
Yeah, he's on Google Finance, just Googling every company he could think of, I guess, because he was showing, Rent the Runway is down like sub $25 million market cap. Allbirds down, whatever, significantly, $30-40 million market cap. And all these brands that really came from the last, decade or so got to the public markets and just got hammered. Now, some of them are probably getting hammered on, in a way that isn't fair to them. But a lot of them just weren't that great at companies, right? And so you can build a great product, not be a good company. You can, have all kinds of issues around capitalizing your business or the returns that you drive, whatever. So I just think that public markets in general are very, very, very good at scrutinizing companies. And I do think that the efficient market hypothesis is nonsense. I think there's a lot of asymmetry that ends up being available in public markets at certain times. But over the long run, usually public markets will get it right. And I think that that's why you continue to see certain companies do incredibly well in the public markets and other companies basically just get, chewed up and spit out. And, let's see what happens with these Bitcoin companies. But right now, the market's very excited and they think that this is a strategy that is going to deliver at least short-term shareholder returns. And so far, they haven't been wrong. Anytime that you have a company where the stock is trading at a very high premium to what would be considered like book value, then it is the duty of that executive team to figure out how to sell shares and raise capital, right? Any company, Warren Buffett, right? If we're overvalued, we should be raising capital. If we're undervalued, we should be buying back shares. That's kind of a traditional capital market exercise. I think there's a lot of people who look at that company in particular. I've never talked to the team there or anything, but just from what I read online, it seems pretty overvalued. Given what their financial performance is. Now, there's reasons for that. There's obviously a very kind of engaged shareholder base, like all the things that people will analyze. But if you just look at how much revenue, how much profit, what's the market cap, big gap.
He highlights companies like WeWork, Allbirds, and Rent the Runway all hyped up during the last bull run, only to see their valuations collapse once they hit the public markets. The market quickly sniffed out the weaknesses. The same dynamic will play out in the Bitcoin space. Some firms will soar, while others will fail. Public markets serve as a powerful filtering mechanism, rewarding solid strategies and punishing empty hype. And when it comes to capital strategy, Pomp makes it timeless. Buffett-style point: raise capital when your stock is trading at a premium, and buy it back when it's undervalued. That's classic smart capital markets wisdom. If you found this insight valuable, please like this video, subscribe to the channel, and hit the notification bell so you never miss future breakdowns. Drop your thoughts in the comments. Do you think the Bitcoin space will follow the same pattern? Want more? Watch more videos from our channel where we break down market trends, crypto insights, and investment strategies. Thanks for watching, and let's keep learning together. See you on next video.